All right. Hello, Matt. Episode 45 of Going Live with Good Soil. I mean, it just feels sort of like Groundhog Day a little bit. Every week or every other week, it's just like a market capitulation. And we're like, oh, this has got to be the bottom, or we're hoping we're near the bottom. And for the last like 3 or 4 months, every other week has just felt kind of like this. And it's rough. I mean, um, yesterday was brutal. End of last week was brutal. We were all faked out after the Fed meeting. It's a tough time for any of us, invested in growth or tech stocks or in the stock market overall. I mean, all the indices have been down, but especially, the growth in tech stocks down 80% in a lot of cases. I think that's like it's brutal. It's like .com. It's reminiscent of the .com bust in 2000 in some ways, in terms of the valuations getting cut down. What are your thoughts, Matt?
Yeah, it's certainly no fun to sit there and look at the portfolio just get like shredded, day after day. But at the same time, like I think there are so many bargains to be had right now. So you spoke a little bit on Dave Lee's channel. I caught that interview about how we kind of repositioned our fund a little bit, closed out some of our shorts, so we're
Yeah.
back to pretty much entirely long only. So, we did that last week, and, clearly that was not the bottom because we had another, like face shredding drop in markets
Yeah.
yesterday. So, you look at that and you say, oh gosh, like I can't believe, we're down X% or whatever. And it's horrible to look at it on a daily basis. But looking at the things that we're invested in the way that we're positioned really for the long term, I'm happy with it, to be honest with you. So
Yeah.
I don't know. I think I really am feeling a little bit more peace than it seems like I should be, considering how
Yeah.
significant the markdowns are right now, kind of across the board. But I think the deals to be had right now are just kind of not sustainable. So I don't know. I mean, it could be another 6 months of further down or sideways or whatever. I don't know where the bottom is, but I do
Yeah.
believe that value stocks are going to win out in the long run, like the quality ones are going to win.
Yeah, and I think we've done enough research. That's where researching, we research ourselves, each of the companies, and obviously anyone investing in their portfolio should be researching carefully every stock they invest in. But if you can develop that conviction and you can, hold through these downturns, the good companies will ultimately be worth a lot more. I mean, I experienced it firsthand, obviously, with Tesla in 2010 to 2000, 19 or 2020, and there was a lot of tumultuous volatility time. Like the stock would go up to 300, then back down to like 100 or back, 350 and then down to 180. And it was just like crazy. It was, and this was all pre-split, obviously. But yeah, I mean, luckily I had been researching it very carefully and I learned my lesson and, to research, extensively the stocks that you're invested in to get that confidence or conviction, we call it, to stay invested and know where the end will be. Like we still
Yeah.
believe the end for Tesla at this point is to be the biggest company in the world and, producing huge dividends at some point potentially, and just the path it takes from here to there, no one knows. It could get cut in half from here in market value, along with all the other tech stocks getting cut in half even again. So we just don't know, but we have to be prepared for that and set our portfolios up for the long term. And that's kind of what you said. The options are obviously are short term, and that kind of goes against that in a lot of ways. It's much more gambling, like when you deal with a lot of options, especially shorter term ones. And I think a lot of Tesla investors are feeling the pain of diving into Tesla options and call options that was so popular. I remember in Barron's in like November, there was an article saying like Tesla options was like 1/3 of all the US stock options volume or something insane. So I'm sure there's a lot of people in pain from this drop in Tesla too.
Yeah, I mean, even if you have a somewhat conservative options, you have a 9% drop, like I think it was yesterday, and your options are probably going to drop 18-20%, something like that. So, and if you've got shorter duration options or, deeper out of the money, it's possible the impact is even higher. So, yeah, I just encourage people to be careful. I mean, the safest thing to do is absolutely to own the equity. So if you're concerned or just want to sleep better at night, that's the thing to do. But I personally think there are deals to be had right now if you're willing to take your lumps as the short term uncertainty really continues. But there's risk. Tesla needs to continue to execute, and like one of the risks that I have somewhat dismissed recently, I'm curious your thoughts, is like especially after Q1, there was just seemingly endless demand. Like Tesla's got way more demand than they can handle, and that definitely still seems to be true right now. But if the economy continues to really struggle and wage growth goes down plus inflation hits, you could see a scenario where the demand just is not there, and so Tesla has to lower prices, and that has margin implications as well. So we're nowhere near, I think, that being a realized risk right now, but it's something that I'm really trying to catch.
It's on the radar.
Yeah, exactly.
Yeah, you want to catch that early if it's going to become an issue, obviously. I think, like you said, I don't think we're anywhere near that. I feel like the economy would have to go into like, close to a depression almost, like beyond recession for demand to really hit Tesla's production, capacity or supply capacity of how fast they can build these cars in the next few years, especially. But it's possible, right? And, something to certainly keep a lookout on. So, yeah, I mean, the big thing, also crypto, Bitcoin, we talked about it on Dave's chat last night a little bit, the crypto drawdowns in this crash, like Bitcoin, you'd think was like the big draw to Bitcoin was, number one, it's like its own asset class that's not correlated. And number two, that it's like a digital gold, and those are the two big draws, I think, for me personally and for a lot of people. And it just doesn't, that case hasn't really been getting proven in this latest downturn of the macro markets. It's unfortunate.
Yeah, I mean that's a criticism Gary Black has made pretty consistently, is that if you look at the correlation of Bitcoin, it's basically just a very high beta tech stock is the way that it reacts. And that's definitely true right now. I think there's reason to believe that it shouldn't behave that way over time. But right now, it's not an inflation hedge. And what you've seen actually is the dollar is strengthening so much that, Bitcoin is falling, but it's falling compared to the dollar even more because the dollar is strengthening. So like if you look at like the Bitcoin prices in Japanese yen or, the euro or something like that, it's still declining, but not nearly as much as it is as denominated in US dollars. So that's another issue that you still have this situation, which I think doesn't make sense. And I think it's due for breaking at some point in the future. But the U.S. dollar is viewed as like the ultimate safe haven right now. People are flocking to dollars, and that's a much bigger market. Like trillions of dollars are going into U.S. dollars or treasuries, just to essentially protect against the unknowns of the market right now. So, that's the safe haven that's pumping up the dollar. But in my mind, that doesn't really make sense given the, deficits that we're running. And, I think there's a reasonable case to be made that the sustainability of the current kind of dollar as the world reserve is not sustainable unless something's done to protect deficits. But I don't know.
And all
right
of the crypto, Ethereum, NFTs, all the other blockchain crypto, all of them, everything's going down. There's like no one crypto that like stands out as uncorrelated, unfortunately. That would
even
be like
the
digital
stable coins
gold.
are falling.
Even the stable coins are getting cracking the dollar. Yeah,
there was one of them based on like the Luna network. I forget what the name of it, but it was like, stable coins are supposed to be stable, and it fell down to like 69 cents to the dollar, I think, yesterday. So I think a lot of people don't necessarily understand how the stable coins are.
I certainly don't.
Pegged. Well, they're different. Like each one is different. They've got different like assets backing them, or in some cases it's like purely digital. And so it's very hard to like see which ones are actually stable versus just you've got a really good market maker that can keep the price within a plus or 1 or 2% band. That's like,
how is that even possible that one of these stable coins dropped to like that low? Like Yeah, I never trusted DeFi to begin with. Like this, like creating money out of thin air from this hyper borrowing, leveraged borrow. I never trusted the whole DeFi movement. So many people hyped it up, and it's just, it just it gives me even less trust in it. Like that is, it's not, like the next, if the market crashes, like everything wrapped up in DeFi is going to, turn to smithereens in my view, based on this. It's just, it's scary. And certainly I don't,
It,
stablecoin. I understand the concept, but I would have to like spend hundreds of hours just like deciphering the code and diving into it to like feel like I really understand it and be comfortable with it. But I'm just not prepared to do that. And just
yeah, I've become a lot more interested in it. So I've started going down the DeFi and Ethereum rabbit hole, and I
yeah,
think the thing that I like about it, at least relative to Bitcoin, is there's actual utility in the stuff that they're providing. So you can actually try to come up with like a discounted cash flow model that will justify the price of Ethereum, or you can use like a PE ratio and that sort of thing. So the fact that there's actual utility, I think, is a differentiating factor, but. Alex in the comments just wrote that UST, which was the stable coin that just fell
yeah,
apart,
Luna,
uh,
yeah,
it's a programmatic peg that uses Bitcoin as part of the backing. So when you had the price of Bitcoin really collapsing and you had some withdrawals coming, then all of a sudden that backing in US dollars was not there. Could be just because of the difference in Bitcoin pricing. So then
yeah,
people start to spook when it gets to 95 cents. And so then people want to withdraw. And so then you've got it's like a run on the bank, and the reserves
yeah,
in the vault are not worth as much as people were thinking they would be. So
yeah.
that's a really
Scary.
scary thing. And I think it hurts trust in all the different, cryptos that are out there. But I think
And all the
there's,
stable coins too. Yeah,
yeah, but I think that it's like we've said in the stocks, like, I think it's going to kill the ones that aren't really reliable. And I
yeah.
think through this volatility, like DeFi is not going to go away. It may get hurt overall, like pretty significantly from here, but I think there's going to be winners that emerge.
Yeah, yeah. Like to me, I don't know. This might sound like simplistic or just like naive or whatever, but when I first dove into Bitcoin, I think it was like 2011. I was fascinated by it and the Byzantine general problem. I like really dove into and watched lots of videos on it and like studied it and feel like I got a good grasping of the innovation that Bitcoin represented, And I was like,
Mhm.
this is cool. Like this could be a digital gold store of value. I'm going to buy a little and hold it and tell everyone. I told old people about it, and I don't think anyone bought any back then. It was like 20 or 30 bucks. But um, since then, you have all these other, Ethereum is this huge innovation, which I don't even fully understand the code or how it all works. I understand from a concept level, bird's eye view, it's like functional crypto or something with smart contracts built into it programmatically or something. But I don't really understand it. I didn't dive into it like the way, like I feel like I'd have to dive into it 10 times more to understand it the way I understood like the Byzantine general problem being solved with Bitcoin. And I'm just not ready to do that. And like all these others, they're all like have these iterations. They're all like derivatives, I feel like, of the innovation that Bitcoin represented. And I'm just so like skeptical because it's like a derivative on a derivative, a derivative. It just gets crazy. It's just like, who really knows what this is? I'm a little concerned about the whole crypto universe at this point. It's
Well,
gotten really crazy. Like there was the
like
initial coin offerings that I knew that was a scam, and then the NFTs is almost another scam with a lure
yeah,
of
for
like
sure.
cool looking images attached to code. So it's just getting crazy. It's a crazy world.
We're not going to launch a board Emmet series where we have some like Emmet NFTs.
Yeah. Yeah.
Yeah,
I
no,
mean, people have
I
approached me saying, make your first tweet an NFT. I'll help you do it. I'm like, no, I don't want to do any of this
yeah,
craziness.
yeah, I agree. Like there's a lot of like scamminess in there for sure, and or not. There is some scamminess, and there's some stuff that's just like bored apes. I don't think those are going to be worth hundreds of thousands of dollars 20 years from now. But maybe I'm wrong, but like to me,
Yeah.
it just seems completely unsustainable. But I
Yeah.
think there's real functional stuff that is being built, and some of it's already has been built.
Yeah.
That's really meaningful. And like one of the ones that got me going down the rabbit hole is Tesla actually is taking out a loan in the stablecoin DAI to
Hmm.
help build its some of its service centers. So it's small. It's like a $8 million loan, I think. But it's at
It's
a
interesting that they're doing that because they don't really
2%.
benefit from it. They're not like they don't need to do it. It's almost just a show of support or like a token or something, show of support, right?
Yeah, well, I think it's a way of building understanding. Like when
Hmm.
they sold that Bitcoin back, was that like last year sometime?
Hmm.
They they were testing the liquidity of the asset. So could they really offload a huge amount in a short amount of time? And they kind of ran that test and it worked. And so I feel like this is the same sort of thing where it's like 100% more of like a hassle and a headache for them to take out this $8 million loan and like go through all the legal paperwork
Yeah.
associated with it. But it's a way of trying out another venue that has potentially a lower borrow rate, and they'll probably learn something from it. So maybe it's just a pilot and it doesn't work and it doesn't scale anywhere, and that's fine. But
Yeah.
if interest rates spike to like 15%, but you can get
Yeah.
a DeFi loan for 4% on something that is like,
Yeah.
then maybe they start doing that.
Maybe.
So to me, it's
Maybe.
a learning more than anything.
Yeah. There's probably going to be some benefits of all this stuff, and some NFTs will be like a digital collectible or art that might stick. But yeah, I don't know. It's a crazy world. But let's move on.
Very
Let's keep.
crazy.
We've been talking crypto, Bitcoin for a while.
Way too
I mean,
much. Way too much.
way
Sorry,
too much. Way
everyone.
too much. Elon and his safety. I mean, there was I talked about it on Dave's channel a little bit last night, and you know, an investor I know messaged me saying he's from Russia. He lives somewhere else now, but he knows the regime very well and the culture and everything about Russia. He grew up there and most of his life there, but he's very worried about Elon's safety himself, and made some good points that Elon can't just rely on a private security team. Even the best money can buy. He really needs a security team that has ex Secret Service people in it, ex FBI and other government agencies, and people, and those people have to have connections to the current folks in the Secret Service as well to have like the top preparedness for a potential assassination attempt or something from Russia. So that I was already a paranoid, and then this guy who's a nice guy, and he doesn't seem like a paranoid type person, and emailed me that out of the blue, and I was like, wow, I think this is right. And there's other people I've seen, other anecdotal people kind of very familiar with Russia say something similar, like this is not to be taken lightly at all. Are you worried, Matt? What are your thoughts?
Yeah, I mean, I think we brought it up on this channel a month or 2 months ago when he first started providing Starlink satellites
Yeah.
to Ukraine. Like that's a very active undermining action of a regime that's been known to assassinate people on foreign soil. So he's clearly aggravated Putin and his allies in Russia. So I think it really is a legitimate concern, and the fact that he's even voicing that now, I think is um, evidence of how legitimate this is.
Yeah.
I heard you were saying on Dave Lee's podcast that you thought it was like a 30% chance that an attempt would be made in the
A
next
10
couple
to
of years.
30% in that
10,
range.
10
Yeah.
to 30%, right?
Somewhere in that
And,
range. Yeah.
and Dave thought
That's
that
what I
was really
figured.
high. And
Yeah.
as I was thinking about it, I think about the 30% chance that an attempt is made to me seems reasonable.
Yeah.
Whether it's successful or not, I think that's maybe less than 10%. But
Yeah. Yeah.
still, like that's a reasonable. Like there's like I don't worry about assassination attempts. So if it was a 10% chance, that like I'd be like that would really change my life if I had to worry about that. So
Yeah.
no, it's
Yeah.
very meaningful in my mind.
Yeah.
Maybe the percentages are wrong, but to me, it's like he's got all these speaking engagements going on right now that make me a little bit nervous.
Yeah, it's not some like irrational fear. Like I think some people think too binarily on this stuff, like too much of a binary thinking on this. Like, we're taught that like, yeah, of course you could be, eaten by a shark in the ocean, or struck by lightning on a golf course, or, run over by a car when you cross the street. Of course those things can happen, but don't think about it all the time, because it's like very unlikely. Probably the car one's the most likely of those. Or dying in a plane crash is super unlikely. I mean, you could worry about these things, but don't live your life in fear of these things. Don't even try to like prepare against these things. Really, it's not like even worth it. And so I think some people dismiss it as like one of those things, but I don't think so. I think it's more like, you know, anytime I go through an intersection driving in a car, like a stoplight late at night or something, I always look left because I don't know if there's a drunk driver just
Yeah.
running through the red light going to
Yeah.
hit T-bone me going really fast. So even though it's a green light, I kind of make sure I'm looking left to make sure there's no car zipping through a red light going to hit me. So it's like that's like a legitimate chance that you die from a drunk driver hitting you, like, and that kind
Yeah.
of precaution can cut that chance maybe in half or something, So I think there needs to be precautions he needs to take to cut his risk down significantly from an assassination attempt. I hope he's taking it seriously. And it seems like he must be if he's going to tweet about it. I mean, even if it's half joking, that means it's half serious, right? So, I mean,
Yeah.
he's probably, taking it seriously. I would feel more comfortable, to be honest, if if this was during the previous administration. I mean, Trump even vocally said, like, we have to protect our Thomas Edison's, our greatest
Our genius. What did he say? Like our
something like that. But
something
he
geniuses.
vocalized it. Like, he made it clear, like, this is a top priority. But you don't hear anything from the current administration about Elon. Nothing praising him. Like, once in a while, Pete
You're gonna be
Buttigieg might drop. We have a poll and we have like 100,000 people signing it, so they have to like name drop Tesla in a speech with GM or something. But you just get the feeling that this current administration doesn't really care, which is it's disappointing and worries me.
Yeah, I don't think, even if it was Trump, or even if you had the most sympathetic administration possible, this is ultimately a personal security issue in my mind. Like, I don't think there's a whole lot that the government could or frankly should do to protect private citizens
Well, in this
who
case, they could offer him like a Secret Service, thing. Like all the former presidents have their own Secret Service entourage, right? So maybe there could be some kind of extension to that for Elon on top of his own
Yeah,
security.
like I would love to see that, and frankly, I'd love to see him not doing so many public speaking engagements and that sort of thing.
Me too.
Having him just put his head down and do his work, I think is what would be the most valuable to the company right now. But
Yeah. Or even keep it
yeah,
virtual more, like he doesn't need to stand up in front of a crowd of 1,000 people anymore. Like that's a little too risky in my mind.
yeah, do it in Roblox.
Yeah. Do it in Roblox. Yeah. Or just do it virtually. Like do it in Zooms. He's done enough
Yeah,
Zooms. He can keep doing that. I mean, I'm sure he wants to meet some people face to face, but he doesn't need to be in the center of a crowd anymore. That's too dangerous
yeah,
in my opinion.
I agree.
Yeah. So, all right, we got that out of the way. Hopefully, hopefully we don't have to talk about his safety much more. Hopefully it's like, it shows that he's in a much safer,
Episode
practice.
45 is the Debbie Downer episode of Going Live with Good Soil. Apparently,
Yeah.
markets are down.
All
Elon
down
might
stuff.
die.
Yeah.
Like
Even
there is no
Twitter
hope.
is like a short now, like apparently according to Hindenburg Research, with Elon commented on like, hey, maybe you're right, or interesting. Like, I don't know. He seems like he's maybe tempted to renegotiate a lower valuation to buy Twitter at. Do you think that's going to happen? Do you think that's possible or practical at this point?
I don't think so. I mean, I think they're right that he holds the cards. And so, I mean, if I'm just going to put on like my stupid finance MBA hat, I'd say, oh, yeah, look, he could pay the $1 billion breakup fee and then watch the stock plummet to $20. And then he could make another tender offer at, $32 and he'd save, X billion dollars. And,
Yeah.
but I think he knows that's a little like skeezy. And also there's a chance, like you highlighted, that the stock could just rip if he tries to do something like that and it takes a month to kind of reset the negotiations. I think he likes to move fast. I think he's got the financing all lined up. He
Yeah.
doesn't need to necessarily save, $5 billion on his, Twitter purchase price to like make his own
Yeah.
life better. It's like rounding error in like his daily up and down, net worth movement. So, I think that would decrease the likelihood of the deal getting done. So I think he's plus it just is not a good look, I don't think. So I think for those reasons he's not likely to try to do it. But what do you think?
Yeah, I mean, I think it's the bad taste in his mouth. It's bittersweet. Like if the opposite was happening and the market was ripping and all the other tech stocks were up 20 or 30% since he made the offer, and you could presume Twitter would be like in the 50s or 60s, but it's not because of holding it back. You could almost find a way where like enough Twitter shareholders are like, no, we don't want to take this, or you got to up your offer. So it's like, it's a double standard in some ways. So I think that's like a little bit of a bitter taste maybe, but you got to do what you got to do. And I think, like you said, it would be it would be heavily scrutinized if he tried to, pull what really would be a more fair valuation. But he sees the bigger picture long term. Twitter has the network effects going for it already. Sure, he could rebuild his own platform to be functionally better than Twitter, pretty with under $1 billion, whatever. Like I think Pope of Muscanity mentioned, but it doesn't have the network effects. I mean, it has Elon Musk and all of us in the Twitterverse, but that's just a microcosm of the entire Twitterverse out there, So the network effect of Twitter already has built into it. I'm not sure you could reproduce that very easily. It would take a lot of time, a lot of effort, probably.
Yeah, I agree. I mean, I did think it was interesting that he did respond to that tweet, though. He said true, I think.
Yeah. I wonder if that's posturing, because behind the scenes, maybe he is trying to get the board or something to agree to a 10% lower valuation or something. I wonder if there's some posturing there. What do you think?
Yeah, it could be. I think he wouldn't want to do anything, overtly, hostile. But I think some sort of conversation that, hey, markets have repriced down what 30% since he made the offer, whatever you think's the right number.
Yeah.
Maybe try to get it down 15% or something like that. Like, I don't think that's outside the bounds of making an ask like that. So
yeah, and I see Marcus Suzuki says in the comments that the 1 billion cancellation really seems like it was built to allow repricing with over a $1 billion change or 2% market value. So yeah, if that was the purpose of it, then yeah, it's clear that it should be utilized. I'm not sure that's the purpose, but it's an interesting perspective. Maybe it was partly the purpose of it. I thought the purpose was more like, they've done enough due diligence where they don't want to, they agree to it in principle, and for them to back off their word with everything else being equal, it's going to cost a lot of money or something, but that's with everything else being equal. Yeah.
Yeah.
But anyway, so moving on, Lemonade, they had their earnings yesterday and their earnings call this morning. I caught the earnings call this morning, or I listened to a recording of it and read their report last night. I mean, we both sort of don't expect a whole lot until car insurance ramps up. I think we've been saying over and over. And, it's right now, this is, in my mind, it's sort of like just kind of a waiting game for the car insurance to kind of materialize. They have Illinois, and they've had that for a full quarter, and they showed they demonstrated some promising metrics on their earnings report about Illinois and its success of annual dollar retention and other things with car insurance there. And they mentioned on the call, I think one of the analysts asked when they expect to release more states other than Illinois and Tennessee. And it sounds like they're waiting for the Metro Mile acquisition to be more formalized, and they expect that to be this quarter, the second quarter. And then they expect the third and fourth quarter for it to be like a step change almost in how many states they offer it to. So not just like one state at a time, maybe it'd be like 48 states in like a matter of a few months, which would be great if that happens. So that's what I'm keeping a close eye on, is this development of the car insurance. Everything else is sort of like, a side dish to me in terms of the real meat and potatoes of the play for Lemonade going forward in the long term is the car insurance in my mind. But what were your thoughts, Matt? You looked at the in-force premium and some other stuff, and you had some interesting, thoughts on that of the current business, I guess, right?
Yeah, it was, kind of interesting. I was texting you a little bit last night, right when the report came out. I was just, looking at the numbers on my phone while I was making some dinner for the kids, and like the headline numbers are a little bit disappointing, to be honest with you. If you look at just the report, because they had, I mean, the one that jumps right off the page that every analyst is going to jump all over is their loss ratio, which was over 90% again this quarter. So, people are looking at that and they say, oh, well, you claim like you're this AI super company, and you like,
and define to us what the loss ratio is. What is it, so people understand?
Sure. So like for every dollar of premium that you bring out, how much are you paying back out in claims? So like the industry kind of benchmark is around 75 cents. So you bring in $1, you pay out 75 cents in claims, and then you're left with 25 cents to, pay your bills and, be your profit left over at the end. So the fact
you don't want to be over, you don't want to be over 100%. That's for sure.
Over 100%, you're losing for sure.
A lot of money with all the expenses on top of that. Yeah, but
then
even 90% is not good.
Like you can't really pay your bills. It's not really a scalable model. So The critics will say, well, look at your loss ratio. Your AI that you brag about is clearly not doing so good of a job. My point, and I've been saying this for a couple of quarters now, we've been putting it out in our shareholder letters and everything like that, is like, that is not the metric to look at right now. Over time, 100%, they need to get it to the sustainable levels. But what is way more impactful in the short term is, what is the growth of your customers, and then what is the revenue per customer that you're generating from those customers. So what is such a compelling bull case in my mind for Lemonade is that they've got exponential growth of their customers, and at the same time they've got a significantly rising in-force premium per customer. So you've got this combination where you're gaining customers, but all of your customers are also spending more. And what they were showing this quarter, which I thought was really incredible, is it was kind of a justification of our bull hypothesis, I think, was in Illinois, the first state where they have actual 4 products. So the pet, the renters, the home insurance, and
the car,
the auto. Like the numbers are just drastically higher. So I wrote them down here because it's just kind of interesting. So overall for the company, the in-force premium rose 66% year over year. For one product customers, they grew 61%. So that's kind of like an indication of the organic growth that they're getting just from bringing in new customers. For 2 product customers, they grew 140%. And for 3 product customers, they grew 390%. Wow. So that's like the opportunity here when you've got one state right now where you have that possibility. So you can essentially 4x your premium per customer from, what is it right now? It's like $220 or something like that. So you're going to be getting closer to like $900 roughly per customer if those figures hold and you're effective at bundling. And that's where I think the huge opportunity to be like a multi-X return from here is. So very long-winded answer, but my kind of takeaway was like the short-term numbers don't necessarily look great, but the long-term thesis is holding for sure.
Yeah. I mean, it's exciting. I mean, they're trading around cash value right now at about $1 billion market cap. They're down a little bit this morning, or another $1.35. So they're at like a 1.05 billion. That's about how much cash they have on hand. It's insane that they're trading at this current valuation. You got to really, like, if you think the stock's going down from here, you got to really think that they're just not a money winning. They're just ultimately always going to lose. They're never going to be profitable. That's basically what you're betting. And we don't believe that. I mean, it's a long-term play. Obviously, it could be a few quarters before car insurance is ramped up to other states. But if, Illinois, there was really a canary in the coal mine of data they showed us with what they experienced in Illinois. And they said that in the conference call, they even said it towards the end. One of the questions was like, what about Tennessee? Or maybe they didn't even ask that, but they volunteered the information that Tennessee, even though it hasn't been a full quarter with Tennessee, it's only been several weeks. There's nothing they see in Tennessee that concerns them that would be different than what they're seeing in Illinois. So that's another data point to take, that like, hey, it's not just an anomaly for Illinois for some reason that they knew they could get by just opening up to Illinois, but actually Tennessee, the second state, is having a very similar effect on these metrics. And so that you would think that all the states are going to have the same kind of benefit that we're seeing with Illinois. And if that's the case, I mean, that's going to be, I think, set up for a short squeeze at some point. I mean, this is a very highly shorted stock. On Interactive Brokers, 100% of any shares you have can be lent out at like a 15% borrow fee. And I saw Citron, famous short seller, tweeted just a little while ago some other like negative stuff about Lemonade, saying, so there's all these shorts that are still on the train for shorting Lemonade. And, if it turns the corner to be profitable and it becomes like clear where they all have to kind of, it feels like the loneliest of all investments right now, and that could be a good thing if it turns the corner, which we think it will, and so this is exciting in some ways.
Yeah, it's like, I feel like we're staking our reputations a bit here on this.
we are
really coming to an inflection point where like we're going to know, I think in a year, I would say, whether or
I'd say
not,
18 months. I'd say 18 months. Just give some extra time because the Metro Mile, even though they formally close it this quarter, let's say it drags to next quarter, then it might be another quarter before they like are able to actually merge then it could be like 6 months till they roll. So I'm saying 18 months. I give a little extra time, but you're saying a year. Okay.
Yeah, I think though, like, well, it'll be pretty clear that
Yeah.
either like they've kind of peaked out on their growth and they're struggling to either get loss ratios down or to like get a handle on OpEx and keep that from or stop that from getting out of control. And so like if they can do that, my sense is it could be kind of like Tesla 2019, where like all of a sudden we're like, oh my gosh, they're about to go off to the races and like get revalued, and maybe we make an options play at that point.
Yeah.
But like right now, it's like everybody, it's so popular to beat up on Lemonade that it's just it does seem like that's maybe a good contra indicator.
Yeah. I see a couple of people in the comments saying that Elon is live right now. I heard that he was going to be speaking at some conference virtually. I'm sure I'm going to watch it record. If anyone in the comments says anything new, let me know. I'm pretty sure he's just at this conference, government conference or something for electric future of vehicle. He's going to I doubt we hear anything new, but if he says something new, let us know. I'll certainly watch it later though. Um
Yeah.
so, yeah, Lemonade, we'll see. I mean, we're staking a reputation on it to a large degree. You're right, Matt. But it could be one of those things that, turns out to be, our biggest winner in our portfolio. I mean, Tesla, we feel like is a safer bet, obviously, but Lemonade is also sort of a binary outcome type thing where it could be wildly successful if the coin flips and its heads on it. It works the way we think it will. So,
Yeah.
we'll see. So next, I guess we'll just go. Anything else we wanted to talk about? Should we just go to Q&A or what?
Yeah, I mean, maybe one of the just thing I wanted to touch on is I've been talking a lot about my really good beta drives I've had recently.
Yes.
And Chris from Dirty Tesla has been having horrible drives, and so we have the same version. We're both in Michigan, and so we actually met up just this morning to kind of like test out the same drives. It was kind of interesting because my car did not do so great. So I was one of my takeaways was it seems like how FSD is overfitted to San Francisco. It seems like
Hmm.
whatever happened on this latest drive or on this latest software update was like overfitted to the drives that I do, every day or a couple times a week,
Hmm.
because it handles those like great. But I was in a different city and it handled some stuff really well, and they made some kind of terrible mistakes. But that'll be an interesting video, I think, to see where two cars traveling the same route, sometimes they make the
Yeah.
exact same terrible mistake, and then other times they behaved a little bit differently. So that
Yeah.
one's I'm kind of curious to see what that looks like when it finally comes out.
Yeah. That'll come out this week sometime, probably.
I presume so. Yeah, I don't know how long it's going to take him
Cool.
to edit it all together because
Make
he's
sure
got
you
two
tweet
different
it.
cameras, and I'll definitely do
Yeah.
that. Yep.
Yeah. I want to see that. Yeah. You got to think that they should reproduce exactly or very similarly. Obviously some lighting or traffic conditions might be slightly different, but the road itself, should be the same, obviously. And, you'd think it would respond very similarly in most cases.
Yeah, there was one kind of interesting case where there was one of those oversized load trucks that like takes up most of the road, and so you had to cross over the double yellow to do that.
Mm.
And there was a car parked on the other side, so it was like kind of a narrow little path. So my car did that, and then it like freaked out and like just turned sharp left for no reason whatsoever. It's like, oh, that
Oh,
was
wow.
weird. But then the exact same thing happened to Chris. So it's like, for
Oh,
whatever
wow.
reason,
The same
the
freak out.
software had the exact same freak out at the exact same spot. So, but then there were
Wow.
other situations where like his car missed a turn for some reason, and so I don't know. It might be interesting. We'll see. I'll tweet it out when it comes out. But
Yeah.
yeah, let's go to questions.
Yeah. So from Farziness on Twitter, so from Farzad on Twitter, he had tweeted this. He was not on the live stream, but he wanted us to answer this. So when he watched it later, would love to catch a snippet of why Kathy bought GM. Is there an underlying reason here? He's so confused. I guess there's a report that they bought some GM in their software based ETF, I guess, and it's not their main flagship ETF. So you got to presume, I guess it's around Cruise or something. The what they think about the prospects of Cruise within GM. What do you think, man?
Yeah, I presume that's it. But it does seem kind of hilarious to me.
Yeah.
That they are so focused on disruptive innovation, and they're investing in the 125-year-old, car company. So
Yeah.
I mean, I don't love to, rag on ARK too much, because like people could rag on us for holding Lemonade for so long, to be honest with you. And it's like,
Yeah.
you need to really look at the long term to, understand if they're right or wrong. But to me, this just like Tesla's been such a great performer lately, so I can to some extent understand them selling their relatively good performer to buy things that they think are relatively undervalued. I disagree with it a lot of times. Like I think selling Tesla to buy Teladoc seems a little bit crazy.
Yeah.
But the strategy at least makes sense. But for GM to say they're like some bastion of innovation, I think is a big stretch. So I don't know.
Yeah.
He may well be proven right, but I think this one's it's like too dilutive. It's not a pure play on like Cruise or on
And it
even their electric
probably,
vehicle
do
division.
you think she personally signs off on the decisions of like that software? Like maybe she does in the flagship fund, let's say the ARKK, but do you think her or Brett Winton personally sign off on like the portfolio for the other ETFs, the secondary, either, do you think so? I don't know.
I don't know. I mean, I feel like at a minimum that she's probably not super well versed in like the underlying thesis of every single stock within there. I mean,
Of
like
course
nobody
not.
could
Yeah, she
could
can't
could
be.
cover
Yeah.
that many. So she has to
Yeah.
rely on her analysts to some extent. So maybe, Tasha or whoever's in charge of that particular fund just thinks there's, more value in
Yeah.
Cruise than the market is currently recognizing. I
The one
don't
thing I could
necessarily.
see, yeah, I mean, the one thing I could see is like maybe there's some thought that they think GM is going to spin Cruise out, and so if you own GM now at the 55 billion market cap, they spin Cruise out at like a 20 billion or 30 billion market cap, but they think they get a piece of it that way for sure. I don't know. Do you think that's
It,
possible?
It's possible, but like again, I feel like that's such a dilutive play, because the vast majority of the company's value is based on like the core ICE business. It
Yeah,
reminds me a little bit of like their space exploration ETF, which
yeah,
owns like Netflix and John Deere Company, and it's like
yeah,
it's a very tenuous relationship,
yeah,
I think, to say that they're at the forefront of space exploration. Like they've got a very
yeah,
small part of their business that handles or that is tangentially involved in space exploration. And
yeah,
Rocket Lab, who we think is actually a leader in space exploration, is not in that fund. And I'm like,
yeah,
so
yeah,
to me, I think non-pure play investments like that are just not the way to go.
yeah.
But who knows? She may
Who
be proven
knows?
right.
Good question. Yeah. From Scott Opened Cries on Twitter, who would fill Elon's role if anything were to happen to him? Would it be an individual or a collection of management? That's funny. I remember I used to think it would be JB Straubel, and then he left. Or, before that, people thought it was George. Who's the guy that used to be like the Apple, work at Apple, then he worked at
Oh
Tesla.
yeah. I forget his name. I
He was
know
in
who you're
charge of
talking
setting
about
up the
though.
Tesla stores, or he was in charge of the Apple stores, then helped set up the Tesla stores. But yeah, he was like a head of marketing for Tesla in the early, 10 years ago. But he was seemed like clear second command to Elon for a while, and then it was JB Straubel, and then he's gone, and then people also thought maybe Jerome Guillen at certain times, but he's gone,
Yeah.
and then Andre Carpathy. I never thought Andre Carpathy, but he's taking a sabbatical. I don't think he would be, but I think some people say Drew Baglino. I know
Drew
that's what I hear.
Baglino. Yeah.
Warren references him. He's met him and talked to him, and he thinks Drew Baglino. I'm not sure though. Maybe it would be the CFO. What's his name? He's
Zach
pretty.
Kirkhorn.
Yeah, Zach. He's pretty calm, and his demeanor seems to be the right demeanor. And he seems, when you're in the CFO, you kind of have at least some base understanding of the whole business structure and everything, right? You're forced to as the
Yeah.
CFO. So I don't know. What do you think, Matt? Who would you speculate?
I mean, to me, Drew seems like the right candidate. Boil down, AH in the comments says, "Who's the guy who threw the iron ball at the Cybertruck window?" That was Franz von
Franz.
Holzhausen. He's the
Yeah.
designer. Like he's involved in the product design. He's not like an engineer. And Zach similarly, like he knows the business inside and out, but he's
Yeah.
not going to go on the floor and tell them how to manufacture things. If you listen to the way that Elon has let Drew kind of talk about all things technical lately, to me it seems like he would be far and away the most likely candidate. I
Yeah.
could be wrong, but he's like, Tesla's an engineering company. It's a manufacturing company. And so I think to
Yeah.
put like an MBA, which Zach is, in charge is unlikely, as capable as he is. I think they want a product person, a manufacturing person, an engineer to lead, not the finance MBA.
What about, do you think they would recruit Herbert Diess? I know he's just signed a new contract, I think, with Volkswagen, but I wonder if
Yeah,
they could get him. I know Elon and him have, had a good relationship over the years. I wonder if there's a possibility to get him to come to Tesla if that
he's
happens,
about
something
the
bad
the
happens.
only outsider I could imagine, pulling that off.
Yeah.
So yeah,
Yeah.
I think he's a reasonable candidate, to be honest with you, because like he's got his hands so tied in the VW situation. He may, enjoy the freedom of just going and being able to execute, at
Yeah.
Tesla. So he could be interesting, but if I had to guess, I'd say it's
Someone.
maybe 50% Drew, maybe 30%, or maybe 25%, Herbert, and then maybe 25% someone else. I'm not thinking of.
Yeah. Interesting. All right. Question from Mark Gomez Tejada regarding Tesla. What PE ratio would be logical for you and for the following years when you expect a 2025 normal PE ratio? Matt, do you want to take a stab at that?
Yeah. So, like 2025, quote unquote normal is when, that's like the S&P 500 average, I believe.
Hmm.
And so in my mind, that is when you get to the point where your earnings are incredibly stable. So you've got to be kind of beyond, or growing your top line and your earnings by like 3% a year, essentially matching inflation. So you kind of saturated your market and you're just kind of, static there. Um, I think they're probably a decade or more away from that, to be honest with you. So that's why I think the PEG ratio is such an important metric to look at right now instead. So, they're growing earnings at more than 50% per year, but let's just use 50 to, um, be reasonable. So that means if Tesla has a trailing PE of 100, which they don't right now, but it's at least close, and they're growing by 50% per year, then that gets you to that kind of normalized PE of 20. So to me, like, there's even, I think, a good case to be made that they're undervalued just on current PEG ratio. Even more so if you look into the future and kind of look at what analysts are expecting them to post in earnings going forward. I think those estimates are too low. So, my expectation is, as they continue to just kind of post these really strong earnings, even if multiples do compress, say to, like, let's say you have a PEG ratio of, well, let's say they have a trailing PE of 50, which seems way too low to me. Um,
Hmm.
then on earnings of 25 in a couple of years, which I think they'll have, then that would be, oh gosh, my math is is getting killed. Um, that would be like 1250, I believe. So, um, yeah, they're like, yeah, I think you can assume some reasonable compression in multiples and still think there's huge upside from here. But I think it's going to be a long time before they get to a normal PE ratio.
From Roy Chu on YouTube. Question: what do you think about the statement of generals get killed last? Apple, Microsoft, and Tesla are the generals. So I think, like, in terms of like a macro market crash and major bear market, you have the growth tech stocks get cut down first, and then the generals, I guess, killed last at the end, like before the market kind of hits the bottom. I guess that's the. But I feel like generals have already been hit hard. Isn't someone? Apple's already down like 30 or 40%. So is Microsoft, I believe. I don't know exactly. And Tesla, they've already been hit hard. So it's an interesting saying I've heard thrown around more recently. It's sort of catchy, but I'm not sure what truth there is to it specifically. I guess it's trying to communicate that, like, even the stocks you thought were safe, are going to get crushed towards the end of the market crash, right? I don't know, but
Well, and like Fang, right, was
yeah,
includes Netflix, which is down 71% year to date. So,
yeah, That was
Like
one
I
of the
think
generals until recently. It's been
that
demoted.
that that general made one mistake and he was executed, right? Like,
Yeah.
um, so I think we're kind of in the middle of a shakeup. Like Facebook has been hit really hard too, or Meta has been hit really
Yeah.
hard, even though their earnings are, arguably decently strong. But I think people are kind of viewing them as like maybe not having a long-term sustainable business model. Like certainly the growth is not there in the way that it used to be. So when you've got 2 billion users or whatever they have, and a population of 7 billion, it's like you can't do a whole lot from there. So
Yeah.
um, their growth is being discounted, I think.
Yeah. All right. Let's go to the new question. From Evan Glansman, what do you think about the timing of the announcement of factory expansions and their anticipating time frame for becoming operational? Do you think it's for the new robotaxi model? Um, so I guess the factory expansion in Berlin and Shanghai recently, I don't think those are for the robotaxi model. I think they just want to ramp up the current models, is my thought. I have a feeling the robotaxi might get produced initially in Austin, and then it will be global as well. But I think they're focused on the full self-driving rollout in the U.S. first, and that might be like a year or two before the rest of the world. That's their ideal maybe plan. And unless the U.S. Legislation or regulators put a stop to it, and make them go somewhere else first with full self-driving. That's just my gut. So I think the ramp ups or the expansions are for just ramping their current product suite, which is really just the Model Y and the Model 3, and predominantly the Model Y. I think the demand is just much higher than anyone really realizes. It's very untapped still, too. What do you have any thoughts, Matt?
Yeah, I would agree with all that. I mean, I think there's going to be both new factories and expansion with existing factories, and I mean they're doing that, I think, as quickly as possible. Um, so it's not like a capital constraint. It's more like a manpower and kind of resource constraint as to how fast they're going. So
Yeah.
they're going to keep going fast. I think what was he was meeting with like a minister from the Philippines or something like that. So that was
Yeah.
kind of an interesting location that I hadn't considered, but it makes sense. I mean, that's a huge population. That's reasonably affluent. That it's also like a cheap place to manufacture things. So that could be interesting. I could see that working out, but we'll see.
From Alex George's question, with everyone bearish, is the contrarian bet being bullish here? I would think so. I would think so. If you can catch the falling knife, I mean, you know, you got to think I think I said on Dave's chat, like, if you believe, if you don't know where we are on the downturn, you got to think we're in the second half of the downturn somewhere, right? I mean, we've already dropped. I think NASDAQ is down like 20% year to date or something, and even more if you go back 6 months or something. So you got to think we're somewhere in the second half of the drawdown. Whether we're at the beginning of the second half or the end of the second, I don't know. But if you buy now, if you have dry powder on the sideline, you buy now, and we are in the second half of the drawdown, then over time it's going to do very well. But um, yeah, it's hard to time when the market's down. And do we stay depressed at these lower, valuations, these lower PE multiples for the long term? Is this a new reality that we have to get used to once we kind of stabilize, or do we kind of bounce back up? At least a lot of the tech stocks. I don't. It remains to be seen. Any thoughts, Matt?
Yeah, I mean, I kind of think it is the contrarian bet. I mean, like looking at my Twitter feed a month ago, it was kind of a split of like, people thought, oh, maybe we bottomed and, maybe it's a little bit worse from here. Now everybody seems to be saying like, look at all like my chart. I'm seeing all this technical analysis, which kind of cracks me up. It's like,
Yeah.
oh, like we've crossed like whatever important support level. And so it's like all hell from here. So I think when everybody seems to be saying that, which definitely seems to be the case right now, that is maybe an indicator. So timing the bottom
Yeah.
is like impossible. So it wouldn't surprise me if we got a lot more kind of pain. But like we were saying at the beginning, I think looking 2 years out from now, I'm pretty confident that the good winning stocks are going to be priced a lot higher, at least if they continue to execute. So
Yeah.
that's kind of how I think about it. But we've got a big inflation print tomorrow too. That's something we haven't talked about. So, I mean, if that's a bad number, it could be more pain. But if it's a good number, I mean, that could be the catalyst to spark a big rally potentially. So,
Yeah.
I think tomorrow's going to be a volatile day one way or another.
Yeah. I just saw on Twitter, Sawyer Merritt was tweeting a note of what Elon Musk is saying, which is stuff we've heard him say before. But a point that we can talk about briefly is like, to start a car company is mega pain. It's not easy money. What I see with some of these new car companies is they are jumping in the deep end and trying to create high volume vehicle when they have never made a vehicle before. This is crazy. That's what Elon said, I guess, pretty much a quote of it. And that's, we've heard him say that before, you know, in other ways, and we believe it too. And I heard a report on Rivian yesterday on Bloomberg, you know, when they were talking about Ford exiting a certain amount of shares, you know, from when the lockup ended and someone else was selling, and Rivian was down like, you know, 20% yesterday, or 10 or 20% yesterday because of this news. And um, the commentator, they give Rivian and these other EV startups so much rope to hang themselves with. I feel like they just cut them so much slack. Like the commentators were like, yeah, Rivian, it was at its high, like 150 billion market cap, and you know, it was ready to be super successful, but then supply chain disruptions caused it not to be able to deliver cars. I'm like, no, it's not supply chain. That has nothing to do with why they can't deliver cars. It's just so crazy that people, how does the financial media still buy into this stuff of these other EV car companies being like, and like announcements, like Lucid's announcing like, yeah, we're making our first deliveries to Canada, and they're like, or we're setting up a configuration page in Europe, and they're trying to like drive their own like all these announcements mean like almost nothing, but they put out press releases on every little step, trying to like brainwash everyone to think that like they're the next Tesla or something. It's crazy. I mean, these EV startup companies still have a long way to go. I think they're probably going to zero probably in the long run.
Yeah, a lot of them will. I mean, the issue is a lot of them kind of raised money right at the peak. So, I mean, the fact that Rivian ever had a $150 billion valuation is absolutely crazy. I mean, they hadn't produced a
Yeah.
car. They've got
Yeah.
incredibly bloated OpEx compared to, Tesla, despite not producing any vehicles really.
Yeah.
Um, and so I don't know. The whole market definitely was due for a correction. So it's like we've been saying in the past, like the multiples across the board needed to come down. But you know, there are going to be some companies that are going to get ground into the ground and die, and there's going to be others that are going to be stronger for, you know, this time that we're in right now. But what you're seeing
Wow.
instead is like across the board blood.
Elon just said, apparently, according to Sawyer, another point is that the commercial impact on Tesla due to him buying Twitter. That's the question they asked him. Like, do they buy Twitter to like help market Tesla or something? Because he's confident they'll be able to sell all the cars they can make. Demand is exceeding production to a ridiculous degree, which is what we kind of think. And he says they're probably going to stop taking orders beyond a certain period of time because of long wait times. Whoa,
Wow,
that's pretty new. That's new. I haven't heard him
that
say
is
that
new.
before.
You did see them. They really changed the Cybertruck order page. I don't know when that
Yeah,
was, but you can't like order we can still order one, but with zero like specs or anything like that.
yeah,
So I think that was probably a smart thing to do, but that's a really good indicator that, you know, demand is still incredibly strong here. So
yeah.
that
Get your
that makes me
orders in now,
comfortable.
folks. If you want, yeah, I better start just ordering a couple more cars. These are going to be like appreciating assets. These are going to appreciate faster than the stock price, probably.
It's
Yeah,
it's so true. My father-in-law like a year ago was trying to buy a new car, and I was like, you should really buy a Model 3, because it's gonna like it's slightly. I think it was like $10,000 more than the other car he was looking at.
yeah,
But you know, I was like, yeah, if you actually like model it out, you're gonna be saving a bunch of money on like, you know, everything else, and it's gonna have a higher residual value too.
yeah.
And he just
I
wasn't
mean,
convinced. He's like, I don't want to spring for it. And now it's like you would have made like so much money just on
yeah,
resale value alone. Like you'd have a free
yeah,
car plus like $15,000 probably. So I think
yeah.
people are starting to wake up to that.
What if our Apple iPhones like gained in value? What if you bought an Apple iPhone and 2 years later you could sell it for more money? That would be that's so like it's so weird to think about, but that's actually what's going on with Tesla. Is it's like, what the, I don't know. It's
Yeah,
just
it's
nutty.
crazy. Like my Model Y that I bought last year, it's like buying a new one now is it's like $20,000 more for the same spec. It's crazy.
Yeah, yeah, yeah. All right, maybe I'm just gonna start. I'm gonna pull I'm gonna pull all my money out of Tesla stock and just buy like as many Teslas as I can, and just store them in a garage somewhere, and then sell them in a year or two, and then I'll probably make more money that way. I don't know. I might, maybe I should do that. I don't know. I might do that. I'm thinking
We've
about it
talked
now.
about doing like a robot trust, kind of like
Yeah,
a master
like a
limited
robot investment
partnership.
trust. Yeah,
Yeah,
or
I
yeah,
think
master
that's
loan
actually
partnership.
a good idea. But we need a whole different structure to invest in stuff like that. But I
Yeah,
think that's a very legitimate business opportunity coming up pretty soon. Is
yeah.
actually
Someone's
investing
gonna
in
be
the
doing
market.
that. Yeah,
Yeah,
you'll see. There's so much innovation in ETFs. I don't know if you could do it through an ETF, but I don't think you can. But yeah, like a master limited partnership, that's probably the structure you need. But you'll see someone do it sooner or later, I bet. Yeah,
yeah.
maybe it'll be the guy we had on a channel way back, Florian. We should have him on again. A guy from the
Yeah, I'm
Netherlands,
actually going
Mister Green.
on Mr. Green in the Netherlands. They're a big Dutch, EV leasing company. They pretty much only do Teslas now. I'm actually going on
They
his
own like 10,000
podcast.
Tesla. Don't they own like 5,000 Teslas or something
I think it's
crazy
like,
like that?
yeah, 5,000 somewhere. It's a huge
A
amount, and
lot.
they're trying to
They're
figure out how
appreciating
they
in
can.
value. Wow.
Yeah, like they've got to be doing amazing right now because they maintain ownership of the vehicles and they're kind of leasing them out at a slightly higher than kind of monthly cost.
Yeah.
But yeah, I haven't spoken to them in a while. I'm actually going on to their podcast, I think next week or in 2 weeks or something like that. They're starting a new podcast, so
Hmm.
I'm interested in catching up with them.
Yeah. Well, it looks like Elon's comments are raising the Tesla stock price. No, just kidding. The whole macro market's up. At the same, if you overlay it with the Nasdaq, they're both up like identically. But maybe Elon's comments are raising the whole Nasdaq. I don't know. Probably not. But just normal fluctuations of the macro market. So let's do what. Let's do one more question. Yeah, we'll do one more question. We probably should stop it. So from Dan Chatka. Is there any Tesla price that would make you want to sell the stock to buy leaps? I'm considering that if Tesla drops to 650. I mean, I think you'll see more and more people doing that. It doesn't have to be an all or nothing thing is the way I think of it. Like if I was to do that, I wouldn't want it to be all or nothing. Like that's like binary thinking. Like I'm going to all like 500 of my Tesla shares or how many shares you have or 1,000 or whatever, and just convert it to as many leaps as I can. If you had 1,000 Tesla shares, for example, I would say like maybe you sell like 200 of the shares and convert it to leaps or something. Then if it goes lower, maybe another 100 share. I don't know. I think that's the way to do it. I think it's way too risky to like just sell all your shares at once to do it. I mean, maybe some people have that risk appetite, but you know, you could, you just don't. The stock is the safest thing. There is potential opportunity at some point, but you don't know. What if the markets stay kind of where they are in terms of valuation for a couple of years and your leaps, decay in time value drastically? Then you're in big trouble, right? So, you don't want it to be your savings of all your Tesla shares. I would not. I would not recommend that. But we don't give advice here anyway. But what do you think, Matt? What would you do in your personal account? I think you
Well,
mentioned something in your personal account, right, on
I just
Twitter.
did do that today, actually. Yeah, so pretty much exactly like you said. Actually, we didn't compare notes, but I
Hmm.
did just take 20% of my shares, and I've been,
Oh,
I had done leaps in the past and done really well on those. But I was
yeah,
like, all right, that was fun, but let's. I've got kind of risky assets in the fund that we're managing together. So my personal account will be a little bit more safe. So it's kind of holding the shares. But with the pricing where it was, I took, like you were saying, 20% of my shares and just converted those into leaps. So it's like it seems very likely to me that those will multi-x, but I could be wrong. So I don't
oh,
want to lose everything if I'm wrong. So
yeah,
that's kind of my philosophy is you've got to. I think investing in leaps is so much different than equities. It takes a different mindset. So like you can get your face ripped off very easily, at least on a paper basis, and you've got to be
yeah,
willing to kind of sit through that volatility if you really
yeah.
believe in the upside. So I would just encourage anyone, only do it if you can actually kind of stick to your thesis and not get emotional about it, and don't do it with anything that you're not willing to completely lose, because it's so much different. It's very risky. The swings are wild. So
Yeah.
just be careful, everyone out there. Not investment advice.
Not investment advice. That's right. Yeah. Yeah, so I guess we'll end it with that. It looks like the markets are kind of turning around as we're talking. The Nasdaq's kind of coming back up. Lemonade is flat, about to print a positive tick on the day. I guess we talked it off. It's 10% down decline or 20% down decline, maybe. Um, who knows? But yeah, the whole market's kind of rallying a little bit here. I was just looking at, we have a bucket of short stocks, and I'm looking at some of them, and some of them have cut drastically, like 90% plus is what but I think some of them still have ways to go, and I wonder if like Lucid, for example, or Rivian, how do those things get to like a $5 billion valuation again or below? Like that's more appropriate for them, maybe like maybe 5 to 10 billion in my mind. So right now there's still 25 billion valuations on those things. Rivian's 20 billion. Okay, so it's getting lower, but I feel like there's going to be, maybe that's when the correction or the downturn is over, when all the stocks that we think like QuantumScape or all these story stocks that aren't going to produce anything are much lower valuations, and then I feel like, all right, now we can have a reset and we can start with the good stocks going back up or something. I don't know. So because it's all like index investing, when the whole market's going up, then you have like Rivian and Lucid going up with them. And it just doesn't seem realistic for Rivian and Lucid to go up in valuation from here, still. Anyway.
Yeah, I agree. Like, these companies are not worthless. Like, they should have like a decent market cap, but the fact that at one point Rivian was like 150 billion while SpaceX was 100 billion. It's like that never made sense, right?
Yeah,
So
never.
I think there's like, potentially this is going to go across the board too far in the downward direction, but then that's healthy for markets, because then the winners can kind of rally from there, and then those that are have been repriced down are priced more appropriately, and speculators who want to take a flyer on Rivian to turn the corner in profitability and like gain drastic market share, absolutely go for it. And you should get a 10x return if you're right on that thesis.
Yeah, they should have to earn it though. They shouldn't just be speculated at it way before they can earn it.
Yeah, like 10 years before you've produced 1 million vehicles, like to have $150 billion market cap, doesn't make sense.
No way. No way. I mean, you could say the same thing about Tesla many years. People said the same thing about Tesla many years ago, but back then it had like the $3 billion market cap when it was in Rivian's current position, or it was just, yeah. So anyway, it's good chatting, Matt, and we'll do it again next week, and hopefully it won't be a Groundhog Day anymore for these types of, market capitulations every other week that we talk about.
Although I think next week is the week that you are gone, right?
Oh yeah, next week I'm gone. That's right. Farzad's, I think, guest hosting with you. Is that right? Maybe.
Yep, Farzad's guest hosting. So maybe that's what we need to turn things around, is just a little change of pace from Emmet and Matt. Well, maybe if that works, I'll take the next week off, and you can find someone else, and we'll just keep rotating as long as markets go up.
Yeah, just try that out.
Thanks for watching, everyone. And
all right, guys. Thanks. We'll see it. We'll be on next week.